It's Johnny Kim, your Orange County real estate agent, and welcome back to my YouTube channel. Today we have another video about the housing market. We're going to dive into the latest debrief from our real estate market in Orange County. And the big question is, are we officially in a buyer's market? And more importantly, how deep is it really? So let's get right into it. The summer slowdown has arrived. As expected, summertime means more distractions, vacations, holidays, and especially the 4th of July. It's not just pool parties and fireworks, it has a real impact on housing. And around this time of year, inventory slows its rise and demand starts to fall. Add in the 4th of July weekend and many sellers hit pause, holding off on listing until the holiday passes. Well, that slowdown, you can see it's clearly in the data this year. Supply is climbing, but it's not a glut. In markets in Southern California, we're finally seeing inventory return to pre-pandemic levels. Not all counties have reached that point yet, but when you zoom out across SoCal, it's clear that there are more homes for sale now than any other time since 2019. And this rise isn't due to pandemic, it's gradual. Homeowners who were sitting on the sidelines are starting to list again. They're tired of waiting, and this isn't all flood, it's a steady buildup of inventory. So far in 2025, we've already surpassed the levels we saw in 2023 and 2022 during the same period. Now let's talk about demand. Despite more homes being listed, buyer activity remains weak. Why? Well, interest rates. We've been hovering around 7% mortgage rates since August 2022, and that's nearly 3 years of elevated rates, and it's keeping buyers cautious. We haven't seen a surge in new buyers, and demand levels in 2025 are tracking almost identically to 2024 and 2023. So while supply is rising, demand is barely bulging. That creates friction and leads to a slower moving market. Some might hear a buyer's market and think we're heading towards a 2008 style crash, but that's not really what's happening. Here's the truth. We have about 1.5 million homes for sale nationally. Back in the Great Recession, we had over 4 million. We don't have the distressed homes, short sales, or foreclosures flooding the market like we did back then. This is not a crisis, this is a cooling, and prices aren't plunging. In fact, in some areas, they're still holding or ticking up slightly, but we are seeing longer days on the market, more price reductions, and sellers needing to be more realistic. It measures how long it would take to sell all the current inventory based on the pace of pending sales. It's more accurate than days on the market because it reflects the current buyer behavior in 2023 and in 2024. This metric has climbed slowly, but in 2025, it's climbing faster, and that's because supply is up and demand is flat. The key takeaway, homes are sitting longer and the market is slowing down. So are we in a buyer's market? Well, yes, but with an asterisk. Buyers have more negotiating power, there's more inventory, and sellers are cutting prices more often. But this isn't a fire sale. You're not going to walk into a showing and offer 30% below asking and walk away with a deal. It's still competitive, especially for move-in ready homes that are priced right. So what will you find is more flexibility, more options, more leverage. And what's coming next? Well, according to the real estate market, inventory will likely to rise further into late summer. Demand will remain soft unless rates drop below 6.5%, and that's the sweet spot that could bring buyers back in force. Expected market time will likely continue to rise through August. And finally, we did see a jobs report that looks strong on the surface, and most of the job growth that came from government and healthcare. Private sector's growth is still struggling, and unemployment ticked down slightly, but not more enough to move mortgage rates. So for now, rates may remain stuck between 6.5% and 7%, and unless we do something that breaks the economy, we're staying there for the foreseeable future. So my final thoughts on the real estate market, we're in a market that's shifting, not crashing. It's more balanced, and for buyers, that's a really good thing. So if you've been waiting for a better time to buy, this summer might be it. And if you're selling, it's all about pricing right and standing out, and the days of listing high and watching the offers roll in are behind us for now. So stay informed. If this video helped you a lot, be sure to like, subscribe, and drop a comment down below and tell me what your thoughts are. If you do have any comments about the real estate market, I'm more than happy to see you guys and hear you guys out. And I just want to say thank you for watching, and I'll see you in the next video.